Hello, in this video, we'll cover Chapter 7, Activity-Based Costing. This material is taken from Managerial Accounting by Garrison et al., published by McGraw-Hill, Ryerson, Canada Limited. We'll first take a look at the learning objectives. We will start with a description of what activity-based costing is and how it can be distinguished from traditional costing systems. We will then take a look at the definition of cost pools and cost objects. And then we will learn how to assign costs using activity-based costing. And we'll also look at how these costs would compare against those calculated using traditional costing. Finally, we would look at the calculation of product and customer margins using activity-based costing. So looking at activity-based costing, it is an approach to costing, a method of costing that assigns costs based on activity. Activities may belong to 5 levels: unit level, batch level, product level, customer level, and organization sustaining level. It's important to keep in mind that under activity-based costing, the activity rates are calculated based on capacity, not budget. And that is different from, say, job order costing, where we calculate a predetermined overhead rate by dividing estimated manufacturing overhead by the budgeted level of the cost driver, such as direct labor hours, etc. Taking a look at the cost hierarchy, we have right at the top, organization sustaining costs. These costs cannot be traced to individual products or services, but they support the organization as a whole. For example, general administration costs would fall under this category. At a lower level, we have customer level costs. These are costs of activities that are undertaken to support specific customers. For example, the costs for sales calls would be categorized here. Next, you have product level costs, which are costs of activities undertaken to support individual products and services without reference to how many units or batches of such products would be. An example of that would be the product design costs. Then costs could be grouped at the batch level, which are costs of activities related to batches of products or services. An example of that would be setup costs. And finally, costs that can be traced to individual output unit level. These are examples of these would be direct materials, direct labor. Here's an example. So Main Corporation has identified a bunch of activities, and each activity has been classified either as unit level, batch level, product level, or customer level. Requirement for us is to complete the table by providing an example of an activity measure for each activity. Looking at A, direct labor workers assemble products. And this particular activity in the cost hierarchy is placed at the unit level. So an appropriate activity measure in this case would be direct labor hours. The second one, products are designed by engineers. It's classified as a product level cost. So if you're talking about products being designed by engineers, perhaps the number of new products designed could be a measure. A batch level cost is equipment setup. Well, perhaps an activity measure for this would be the number of setups. Coming back to the unit level, machines are used to shape and cut materials. Well, if you're keeping track of the machine usage, perhaps machine hours would be an appropriate activity measure. Monthly bills are sent out to regular customers, and this is seen as a customer level cost by the company. An activity measure example might be the number of bills that are sent out. Materials moved from the receiving dock to production lines is seen as a batch level cost. An example of an activity measure might be the number of loads that we transferred from the dock to the production lines. And then lastly, all completed units are inspected for defects. It's seen as a unit level cost. An example of an activity measure would be the number of units that were subject to inspection. So digging a little bit deeper into the notion of cost drivers, if we use a single cost driver, which is typically what's done under traditional costing approach, although the benefit is simplicity, using such a single cost driver can result in miscosting of products. We may end up over or under costing our products. And the consequence of that is that we may end up mispricing our products. So some products could end up subsidizing others if we don't have a good idea, clear idea about the true cost of producing certain products. We may end up charging too much or too little, and that can definitely distort our pricing and certainly can have an impact on our overall profitability levels. And this is where the promise of ABC, activity-based costing, lies. ABC should help us avoid distortions that can arise from the use of a single cost driver. Let's take a look at how we assign costs under activity-based costing. The very first step is to identify the cost objects, what it is that we're looking to determine cost for. As a next step, we identify direct costs for these products. So direct costs include the cost of direct materials and direct labor. And then we identify activities and cost allocation bases for allocating indirect costs. Recall, indirect costs would include manufacturing overhead. Activity-based costing actually does not distinguish between product costs and period costs. So you can have certain items that you would traditionally consider period cost under a traditional costing approach to be included um, under activity-based costing as a related product cost. Step 4, we accumulate the indirect costs in what's called cost pool for each allocation base. And that effort is basically keeping track of the costs for that particular activity. Next, we calculate the rate per unit for each cost pool. And that is done by dividing the amount from step 4 by the activity level identified in step 3. We calculate then the indirect cost that's allocated for each product using the rate from step 5 and the activity level of the allocation base. And then lastly, we calculate total costs for the product by adding the direct and the indirect costs. So direct costs were in step 2, indirect costs were allocated in step 6. Here's a numerical example. So we have been given information about resource consumption at a bank branch. And we can see that there are 3 categories of costs. Teller wages accounted for 150,000. The assistant branch manager salary was 70,000. The branch manager's salary is $85,000, and that adds up to 305,000. Now, this bank has tried to analyze what activities each of these cost items relate to. We can see that tellers and the branch manager are not involved at all in opening of accounts. That's likely the remit of the assistant branch manager. For processing deposits and withdrawals, 75% of that relates to the teller wages, and that should make sense because it would typically be the tellers that customers will have interaction with. But you can also have certain circumstances where maybe a high net worth individual customer comes in and the assistant branch manager would like to serve them. Maybe you have a business window where the assistant branch manager serves, or it could just be the assistant branch manager needing to step up when there is a huge rush of customers during peak hours. For processing other customer transactions, the teller's involvement is lesser. You have the assistant branch manager and the branch manager being more involved there. And then there are other activities, which all sums up to 100%. As part of 710, we were supposed to do a first level cost allocation. So looking at these various activities, we need to allocate the teller's wages, the assistant branch manager's salary, and the branch manager's salary. So the way we go about it is we take the percentage of that particular activity level that relates to teller wages. So opening accounts is 0% for teller wages, but 10% of the assistant branch manager's salary. So under opening accounts, we would take 10% of 70,000. For processing deposits and withdrawals, 75% of that cost relates to teller wages. So multiply 75% by 150,000 and 15% with the assistant branch manager's salary of 70,000. So on and so forth. And we should end up with $7,000 as the cost belonging to the pool for opening accounts. 123,000 would be the sum for the cost pool related to processing deposits and withdrawals. 57,000 is the cost pool relating to processing other customer transactions. 118,000 for other activities, and we get back our 305,000 total costs for the branch. The next example continues with the earlier one. And here we saw, so we are given total activity at the related branch. That branch's name was the Windsor branch. And so this branch opened 200 new accounts, helped process 50,000 deposits and withdrawals for the period, and also processed 1,000 other customer transactions. And as a comparison, we've been provided the lowest cost among all of the bank's branches in Canada. So the cost for opening an account, the cost level for that activity has been calculated to be $24.35. For processing deposits and withdrawals, the cost has been determined to be $2.72 per transaction. And for other transactions, the cost has been determined to be $48.90. And so by way of a second order comparison, what we can see is we can first of all determine what the activity rate is relating to these activities, opening of accounts, processing deposits, and processing other customer transactions. And we get that by dividing the total cost pool, which we had calculated in the earlier example, by the number of activities relating to that particular cost pool. So for example, if we open 200 accounts and the total cost was 7,000, the average activity rate here at the Windsor branch is $35. How does that compare to the lowest cost at other branches, $24.35? Well, the cost at the Windsor branch is higher by 44%. Now, how do you get the 44%? You calculate the difference between what the cost is at the Windsor branch and what is the cost at the comparable branches. And that difference divided by what the cost is at the lowest cost branch, that's how much Windsor's number is higher. And similarly, if we look at the cost To process each deposit and withdrawal, the activity rate at the Windsor branch is $2.46 compared to $2.72. Here, certainly the Windsor department's cost is lower by about 10%. The cost to process other customer transactions, though, is 17% higher at $57 per transaction compared to $48.90. So this would be a look at the so what. Once you are able to determine the costs at activity levels, then um, management at the bank can take decisions about if there's any way that we can achieve efficiencies, greater efficiencies. Um, Possibly, I would say, maybe we are not opening as many new accounts, and that's why the average cost is higher. Probably the Windsor branch does process a lot more transactions than are done at an average other comparable branch. Um, Maybe the level of complexity that other customer transactions are handled at the Windsor branch is higher. So we don't know, and we should not jump to conclusions based on certainly just the fact that the cost is higher or lower. There must be some explanation for that. And it is the appropriate task of management to pursue those explanations to get a good sense of why our costs at this given branch are different from other comparable branches. Next, let's compare activity-based costing with traditional costing approaches. So under traditional costing approaches, such as job order costing or process costing, non-manufacturing costs are excluded from product. Activity-based costing, though, says we should include a non-manufacturing cost if a cause and effect relationship exists between the cost driver and the product. Similarly, under traditional costing approaches, we include all manufacturing costs, which means direct materials, direct labor, and manufacturing overhead in product costs. Activity-based costing, though, would argue that some of the manufacturing costs can be excluded if we are not able to establish a cause and effect relationship between the activity level and that related cost. A traditional costing approach will use usually a single cost driver. There might be direct labor hours or machine hours. Activity-based costing uses a number of cost pools with each having their unique cost drivers. Finally, the overhead rates under traditional costing approaches are usually based on budgeted levels of the cost drivers, and that can result in either over-allocated or under-allocated overhead. In contrast, we calculate the overhead rates on actual activity levels of cost drivers, so we do not get over or under application. Let's take a look at an example. So this company makes baseball caps and lanyards. Currently, overhead costs are allocated based on direct labor hours. During the year, the company produced 2,000 caps and 1,500 lanyards. We're told that it takes zero point 0.4 direct labor hours to produce one cap and zero point 0.1 direct labor hours to produce a lanyard. The owner has identified other activities that can also drive costs and is considering a change to activity-based costing. We've been given information. There are three cost drivers: number of machine setups, number of inspections, number of shipments. We've been given the total costs for each activity. So this is the cost pool for machine setups, cost pool for inspections, and cost pool for number of shipments. And then in terms of the driver, it's the volume, right? So number of machine setups, there were 16 setups required for the baseball caps, 12 required for the lanyards, 12 inspections were needed for the baseball caps, while 8 for the lanyards. And in terms of number of shipments, we had 80 shipments for the baseball caps and 60 for the lanyards. The requirement is to calculate the amount of overhead that will be allocated to each product. First, using the traditional allocation method, which is currently based on direct labor hours, and then to compare that to what would be the cost allocated using activity-based. So starting first with the traditional approach. For the traditional approach, we will first calculate the number of direct labor hours required. So we had 2,000 caps being produced. Each cap needs 0.4 direct labor hours. So 2,000 multiplied by 0.4, 800 direct labor hours were required for the caps. And likewise, 1,500 lanyards times 0.1 direct labor hour each lanyard gives us 150 direct labor hours required. The total direct labor hours required, therefore, is 950. Now, the total overhead that we have is 22,800. And that's the sum of the costs for the machine setups, inspections, and shipments. If we divide this total 22,800 by the 950 direct labor hours, we get overhead cost for each direct labor hour is $24. If we multiply the overhead cost for each direct labor hour by the number of direct labor hours for each product, we get the cost that is allocated to each of the product types. For caps, it's 800 direct labor hours times $24, 19,200. For lanyard, it's 150 multiplied by 24, which is 3,600. And once again, the $24 was obtained by dividing the total overhead cost, 22,800, with 950 direct labor hours. If we try to do the same calculation under activity-based costing, we would first need to look at the activity levels. So we have three activities, types of activities: machine setups, inspections, and shipments. For machine setups, a total of 28 setups were performed during the period. Number of inspections, we had 20 such inspections. And for shipments, we had 140 such shipments. Dividing the cost by the activity level gives us the activity rate. For machine setups, $12,000 divided by 28 setups gives us a cost per setup of $428.57. For number of inspections, $800 divided by 20, that's $40 for each inspection. And for shipments, $10,000 divided by 140 shipments, that's $71.43. So under activity-based costing then, the cost that will be allocated for the caps or machine setups at a rate of $428.57. For 16 machine setups, the cost works out to $6,857. And for the lanyards, 12 times 428.57 is $5,143. For the inspections, $40 per inspection multiplied by 12 inspections for the baseball caps is $480. And for the lanyards, it's 8 times 40, $320. For shipments, 80 shipments times $71.43, that's $5,714. And for the lanyards, 60 multiplied by the 7143 is $4,286. Sum them up, you get for the costs of caps, $13,051, for lanyards, $9,749. Now, if we compare these amounts to the traditional costing amount, certainly it seems that for the caps, traditional costing is assigning a greater amount of overhead to the caps and not enough for the lanyards. Now, if this results in miscosting, and that is a possibility, then we are overcosting our caps and undercosting the lanyards under the current traditional approach. Moving to activity-based costing will give us a a more precise sense of what it truly costs this company to make the caps and the lanyards. And assuming that the company's selling prices are a reflection of its product costs, then the company should be able to better price its products relative to competition than it is able to do currently. Next, we will take a look at customer activity-based analysis. We can justify the use of customer ABC in the sense that all customers must be profitable on a full cost basis. If we are not able to even recover our costs from serving the customers, then essentially those customers are a drag on the profitability. So in the face of competition, which is price-based, companies may have to make a difficult decision about letting go certain customers if they do not overall contribute to the company's profit. Even if they're not profitable, the company would like to be able to recover its costs. So when performing customer ABC analysis, we treat the customer as the cost object. And the costs relating to that customer are then classified into 5 categories: the customer output unit level costs, the customer batch level costs, customer sustaining or supporting costs, costs related to distribution channel, and corporate sustaining costs. As an example, we have Colby Company, makers of cell phones cases, and they have 2 models, a standard model and a deluxe model. The management has already designed an activity-based system, and there are 3 activity cost pools: supporting manufacturing, order processing, and customer service. The activity rates have been calculated and provided to us. Management would like an analysis of the profitability of a particular customer called Sale City. And we've been given some data about the number of cases that the customers ordered, the number of orders that were placed, direct labor hours for each case, selling price for each case, and the direct materials cost. The company's direct labor rate is $19 per hour. So if you think about profitability analysis, profitability is about determining the customer margin. And for customer margin, what we would like to do is calculate the total sales to this customer and then subtract all the costs pertaining to serving the customer. Since we are selling cases, these cases come at a cost to produce. So there's direct materials cost that we can see. We also need labor time to produce, and we've been given the amount of direct labor hours for each case. We can multiply the direct labor hour for each case with the number of cases sold to get the total direct labor hours, and then multiply that by $19 an hour to get the direct labor cost. And then for the overhead costs, supporting manufacturing is based on direct labor hours, and it's $3 for each direct labor hour. We can multiply the direct labor hours calculated for each of the 2 products by $3 to get that cost. For order processing, it's based on number of orders. We can multiply the number of orders with the cost to process each order. The customer service cost cannot really be apportioned between these 2 products, so that would be a customer level cost. So the calculation of customer margin for Sale City is provided here. There were sales, 120 units sold of the standard model at $35 each for $4,200. For the deluxe, 35 units at $55 each for a total of $1,925. The direct material cost for the standard model is $10 per unit. So 120 units times 10, 1,200. Whereas for the deluxe model, the cost of direct material is $12 per unit times the 35 units sold gives us 420. The direct labor time needed was provided in the earlier slide. It was 0.2 labor hours for each standard model. So 120 units times 0.2, that gave us 24 direct labor hours, and the labor rate is $19 an hour. For the deluxe model, it takes 0.4 hours. So 35 units times 0.4 gave us 14 hours of labor time. And again, the direct labor rate is $19 each hour. For the supporting manufacturing costs, that cost is $3 for every direct labor hour. So we borrow the direct labor hour information and multiply that by 3. For order processing, it's $15 to process each order. We had 5 orders for the standard model and 2 orders for the deluxe. And that, when we add up the total costs, results in total product level costs of $2,561 for both the products together. Subtract that cost from sales, and we get total product margin is $3,564. Now, individually, if you were to look at it, for the standard model, our product margin was $2,397. That's the difference between sales, $4,200, and the total product level costs of $1,803. Likewise, for the deluxe, total sales $1,925 less the product level cost $758 gives us product margin $1,167. The customer service cost is $50 for each customer, and that can only be calculated at the customer level. Now, something that I would like to point out is when we compare the product margins for the two products, it's useful to express that information as a percentage of sales. So if we divide for the standard model $2,397 of product margin with the sales of $4,200, the product margin as a percentage is 57.07. So 2397 divided by 4,200 times 100, that's 57.07%. If we compare that to the deluxe model, it's profit of 1,167 divided by sales of 1,925 times 100. The profitability for the deluxe model is 60.62%. And that is consistent with what we would expect, that the deluxe product, you have less sales, but you get greater profit per unit. You get greater profitability because of higher margins there. This concludes our discussion of Chapter 7. We will take a look at additional examples in class. Thank you for watching.